we're going to talk about overnight risk. Over the past 3 months, it was more common to see the market open relatively unchanged prior to the close. Most of the action happened intraday as opposed to overnight. I have to tell you, if you asked me this question, I would say that the majority of the time that I have done a zero DT, it has opened over $30 higher or lower.
No,
I haven't seen a single opening that's opened unchanged. But
and you're saying that's the outside the daily range, around the daily range,
yeah, right.
That thing, yeah. So
I thought most of the action over the last 3 months happened outside the range, I would have guessed. And before that, it was inside, but who knows? So according to our research, since May of 2023, the probability of the percent of days, excuse me, where the market opened with 10 points to the close is 51%.
God bless you.
10 to 20 points, 33%, and more than 20 points, 16%. Well, I must just pick the days it opens over 16%, because I think I've had every one of those days. I mean, I've had every one of those 16% of the time days. So it happens 16%, 100% of the time. Let's go to the next slide. If you trade SPX until 3:15, which we do, how much extra could you make by selling an iron fly for the next day's expiration after the cash markets close, compared to the standard zero DTE on the open? Interesting question.
I mean,
I tend to do the 1 days just before 3:15. I probably do them around 2:30, but whatever the case is. I looked yesterday, and I didn't want to do it. And at the money yesterday was trading for 860, and I did not like that 860. I thought it was way too much money given NVIDIA earnings. Now the 860 is probably good here with the S&P's down 5.
You have the same market today where we probably opened outside.
I know, but overnight they were up 33. I would have hated that position.
Right.
I mean, today down 5
down
years.
Down 5 now. You love it.
It's golden. Yeah.
Right.
Anyway, let's go to the next slide. So we looked at SPX, and you can do SPY and you can do XSP, which is the smaller to 1/10 the size. So you just take 1/10 of all these numbers down. Sold the at the money straddle and brought the wings to the following widths: 10, 20, and 30. We do 30 every time. Compared selling directly, and this might be the reason that 30 might not be the best one. That's why we're going to do the research. We compared selling directly after the market close for tomorrow's expiration versus selling at the opening with the zero DTs. We computed the difference in premium and the overnight P&L if the market had it open within 5 points, 10 points, or outside of 10 points of yesterday's close. Let's go to the next slide. So if you sold an iron fly directly after the close for the next day's expiration, you would get the following average prices. So $10 wide. This is an iron fly, so it's the inverse. So you're risking the difference between the credit you receive and the width of the strikes. So $10 wide, you're risking $1.20. $20 wide, you're risking $4.70. And $30 wide, the one I've been doing mostly, risking about $10.20. That's about right. I've been doing the butterflies for about $10.20. Okay? So around $10. I did one the other day for $9.30.
Yep.
But whatever.
Yep.
Close enough. Let's take a look at...
Volatility changes. These markets change too. They're not always the same price.
Exactly. Let's go to the next slide. So if there was a big price change from open to close, or from close to open, was there a significant impact on P&L of the wider flies, with the $30 range flies losing over 6 times more than they would have made on an unchanged opening? So here's the SPX. This is an average iron fly with zero DTs based on the open to close, and let's take a look. So $10 wide, open within 10 points to close, you'd be up $30. These are the overnight things. I do the $30 wide, up 100. The other day I did it for $9.30, sold it for $10, up 100 is probably pretty fair. Open between 10 and 20 points, you're a loser, pretty much, unless you do the cheapies. And open over 20 handles higher, which is the one I do, you're down a lot. Which has kind of been my problem. So looking at this, I should be doing $10 wide, not $30 wide.
That's right.
I mean, it's clear as day here. S&P's down $12, NASDAQ down 125.
Trading at the lows, that's correct. Volatility up 45 cents.
Yes, should have kept some of those short deltas. Let's take a look at the next slide. Since narrow iron flies were not as affected by the large overnight moves, it may make sense to trade narrower flies overnight. So keep in mind from last week's market measure that it takes a lot longer for narrow flies to decay. 100%. Everybody knows that. Let's go to the next slide. Oops, go back one. Missed one. Go back one more.
What you looking at?
Yeah, no, go back one more, Beth. Just want to make sure I didn't miss something. No, I didn't. Okay. So the ones, I just want to repeat because I just get confused. The ones I do are about the $30 wide. I pay about $10. Go to the next slide. But what I realized after looking at this is I make $100 on the opening, on a dead opening, but I lose $600, which makes more sense because I haven't been doing I would say they've been a wash-ish kind of, but I haven't made any money on them for sure. And
You've had winning trades, you've had losing trades, you haven't gotten anywhere, is what you're saying.
You shouldn't make 100. You should make more than that. And to lose 600 if they open over 20, I don't like those odds. So I got to do something different. Now go to the next slide.
You also lean them one direction. The other,
lean them a little bit to the upside.
Long. They're looking at the at the money too, which is different.
So this is interesting. Narrower iron flies were not as affected by the large overnight moves. So it may make sense to trade narrower ones. So keep in mind from last week's market measure that it takes a lot longer for the narrow flies to decay. So tonight on the close, we are going to do a narrow one day. I'm not going to look at the prices now because it's too early in the day and things could move a lot more. Let's go to the next slide. So since May, roughly 1 in 6 days, yes, the SPX saw an open larger than 20 points from the close. Despite the 1 in 6 chance of a big move, the effect on short iron flies was significantly greater than the positive P&L on an unchanged open, and that's what's happened. Those wanting to trade overnight moves without a lot of overnight risk should consider a narrower butterfly or iron fly. That is exactly what I'm doing, starting tonight.
Very good, sir. Let's take a quick 90-second break and come back. We got, Joy, your friend and mine, Mr. Scott Sheridan in the house, Tasty Trade World Headquarters, where you all should be trading. We'll be back in 90 seconds.